So Granite portfolios are set up to be slightly bullish, so a little bit overweight on the equity side. And when we think about the fundamentals, we still see decent fundamentals. Yes, valuations might be a little bit more pricier than historical, but again, compared to the opportunity set, we still think that we should have a slightly bullish view towards equity markets. But on top of that, we do have parts of our portfolios positioned for any sort of market correction or any higher volatility scenarios. So therefore, I feel really good the way Granite portfolios are structured right now in light of that current economic environment. When we look around the world and we look at different countries, our view really hasn't changed much. We think most economies are generally improving over time, and therefore we haven't made much change towards our geographic allocations. That being said, with Bank of Canada already raising rates twice, there's definitely a bias here for us to have a bit more of a bearish view, especially if they start to raise rates a third time. So when we think about it from that perspective, we could see a further reduction out of our Canadian equity portfolios if the Bank of Canada follows through on that third rate hike. Now, the Bank of Canada has raised rates already twice this year, and that definitely is going to add more pressure to Canadian bonds, and we have reduced our allocation to Canadian bonds. But we've done it actually more from a strategic standpoint than a tactical standpoint. We've been introducing US bonds into our portfolios and diversifying that exposure a bit more as well. So the move from Canadian bonds to US bonds, again, is more of a strategic reason rather than tactical. Overall, we do see more pressure on bonds generally, and that also includes Canadian bonds.